Trading is a terrifying endeavor, whether we are trading stocks, metals, indices, commodities. The loss and volatility are like tornadoes that can annihilate our savings, our hopes and dreams, and our rental payments for the year. But there are different ways we can deal with and see loss or volatility of the market when we are trading. Here are some ups and downs, the thoughts and feelings we go through. We are either a victim, a perpetrator, a lover, a perfectionist, a vendor. But how do we manage our fears, our emotions while trading? Because our well being is a big part of our trading. Not having a healthy attitude or mindset steals our chances away. So, let me share some mental health tips as well as trading techniques which may help you trade profitably and healthily. All right, so the first is the victim. As traders, we see the dwindling of our capital or see the market going against our bet. And we feel rigged, victimized by the market, and it's like the market is meant to take our money. It is not a fair game, or we feel like, why can't we win or just get a break? The markets, whether indices, commodities, forex, cryptocurrencies, are a collection of institutions and retail participants. The price action is a combination of manipulation, profit taking, but also greed and fear. To feel victimized is natural. There's always a part of us, big or small, that wishes for mercy of the market. Who doesn't? But the truth is, the markets do not care about how we feel, whether we go bankrupt next week, lose our house, live in the streets. By doing so, they will rise or fall according to the collective consensus. They are moved by people or institutions who want to gain for themselves, not for you. They are unkind, ruthless, even it may feel. To feel victimized may be coming from the illusion that the markets are kind, helpful, the savior to our debts that we have to pay, or the luxury we want to afford. This perception of is the exact opposite of what the markets do. Therefore, to trade or invest this way won't work. The markets are looking after themselves, and if they are, so should we. Because we certainly won't buy or sell to lose for the institutions or our friends, right? So, if this is happening to you for your mental health, whenever you feel sorry for yourself, acknowledge this, let it sit, but remind yourself that the markets are not there to help you, or you're not a charity case, because they are looking after themselves, and so should you. So try to do this every time you feel it until your mentality changes. When we wait or expect the markets to be generous to help us profit, we are being dependent on the market. We become happy when the trend goes with us. But when it doesn't, or when we lose, or when we're getting impatient, we wallow in pity for days, become grumpy to everybody. We want to quit because we are not smart enough. When this happens, we lose control over our trade and ourselves. The trend begins to hold the power to what we feel or what we are able to participate in. And so when we become dependent on our profits or losses, we become run by the market, become its pawn. We lose our personal power. We surrender the control of our money or even our lives. We become a puppet to the market that affects us, whether to rejoice or to sit at the edge of our seat for an hour. But our loss or setback does not have to take over us or rule over our day in such a way that we cannot already open ourselves to other opportunities, let alone acknowledge a cute child smiling at us or, laugh at a joke that someone tells us. Our losses, the dips, and the long red candle do not have to doom us. It is an instance or a phase or a day of our life. It is not set in stone. It happens now, and tomorrow's another day. It doesn't have to be that way forever and always. If this is happening to you, try not to let your loss control the rest of your mind. Try to not let it doom you for life, for a day. Try to discipline your mind. Keep the darkness from taking over all of your mental space. Live the rest of your day. Chat with the people who love you, who cherish you. Laugh at the things that are funny. You don't need to win in order to feel good or smart or acknowledge the cute pet. Your loss does not have to dilute your self concept, your self image, your abilities, erase or shrink your achievements. Again, it is just an instance of your life. You don't have to deny it, but you also don't have to doom yourself forever either. So, for your mental health, allow yourself to feel bad for an hour or two, learn from it, or write your experiences down so you can review, and then enjoy the rest of your day. Keep doing this. It will take time and a lot of effort until it becomes easier. For trading techniques, if you want to take your power back, you may need a plan or a set of guidelines before you enter a trade, and you follow that very strictly. Examples of these guidelines will be discussed later in the video. Now, the second type is the perpetrator or revenge buy. When we are losing in trades or when the volatility is so unpredictable, sometimes we want to almost put a curse or plan our revenge or make it pay for punishing us or from taking all our money. And when we feel that way, we become restless, we insist, we become bullheaded, we want to make the market sorry, and we become impulsive without looking at the changing chart, or we bet big. We try to overcome the victimhood or being played in the process. We tend to be impulsive because of the intensity of the revenge buy. It takes over us like a raging forest fire and throws our logic and strategies out of the window. We become reckless by trading more than we can afford or entering at any point. Like the victim mentality, number one, this tendency also comes from the expectation of a helpful market. We think it is the expectation of generosity. But again, the markets are looking after themselves. Moreover, when we wait or expect the markets to smile upon us, we are also being dependent on the market about how we feel. We become its pawn or puppet. We may feel played or manipulated, but we don't have to punish the market by being reckless. Or we may be toyed around, but we don't have to mess up our game because of this. If this is happening to you for your mental health, whenever you feel like punishing the market, leave the room. Take a long walk. Acknowledge this, but remind yourself that the markets are not there to help you because they are looking after themselves, and so should you. Do this all the time until you can limit the rage into a few minutes. This is the market controlling you, taking over your whole day, so limit it. Exercise can be good also to release the frustration. Hopefully, eventually, even if the trend is not going your way, you can still fully participate in interesting conversations or encounters. Scroll your favorite comedian, put on your lipstick if you want to, and just treat this as a bad portion of your day and not the whole of it. You might also want to write your experiences down so you can review your decisions. Again, if you want to be released from the control of the market, you may need you might need a plan or a set of guidelines that you follow very strictly so you can't be manipulated. Examples of these guidelines will be discussed later in the video. The next type is the lover. When trading and we are losing or the trend is reversing, we remain stoic and we don't mind losing all our capital at all. We move on too easily. Then perhaps we buy a dress or two to make us feel better, or we lose but let the loss just linger around like a stain we don't want to wash off. We just move on, forget about it. We suppress the disappointment, act so cool about losing, like it was nothing. To want to move on, forget about the loss is truly convenient. There's always a part of us, big or small, that wants to suppress the disappointment as if we can, because we know it burrows deep in our mind, or it still causes us to forget something at work, or it inserts itself when we need to concentrate. When we become indifferent to loss, we tend to excuse our losses as not trying hard or not giving our best so we don't look affected. We pretend to be okay by telling people it does not scratch the surface of our ego. We lie to ourselves instead of admitting the avoidance to take it seriously, which requires us to be upset, unsettled by the volatility or loss. But to just forget, move on, distract ourselves by shopping, we may be perpetuating the idea that the markets cannot kick us out of our apartment or bury us in debt. Because the market can cause us to lose everything. Therefore, to trade or invest this way won't work. When we just want to move on, this probably happens because of the illusion that our capital is bottomless, that something will come around and fix itself, or our losses would just magically replenish itself, just like swiping your credit card a million times, like an endless cash machine, unaware or denying consequences. If this is happening to you, the sad truth is that your capital does not replenish on its own. You have to replenish it by yourself. Or if someone replenishes it for you, then you may not be learning or improving. The market may not care about your losses, what it does to you, but you don't have to mess up your financial habits just because of this. The markets are designed to profit from people who do not mind losing their money and don't like to improve. They love it, in fact, because the savings you willingly lose is someone's gain. When we just want to forget about our losses, whatever happened to us, it can be an attempt to maintain control, to not crumble, collapse to failure, or self sabotage or self judge. We don't want to surrender our control to the market. We don't want to be dependent on how we are doing in trades like the victims and perpetrators, yes. But our indifference does not improve our strategy if we just want to move forward. We usually want to move on or move forward because we are afraid to break down, because it would open our can of worms, expose all our insecurities, bring them to the light of day, even the ones that might not have anything to do with our trades, like past failures, discrimination, mockery of our talents. In trading, however, fear and failure are constants. Every trader is always afraid to lose. For a thriving trader, they mind the blow, the reverse of expectations, but they hang on anyway. They just learn to shrink their fear and inflate their skills, their strategies, their determination to be better next time. If this is happening to you, you don't have to forget about your losses and avoid the volatility so you can be in control. Volatilities and losses are necessary in trades. Trading would be a nuisance. If everyone wins in the lottery or casino, no one would be wiser. No excellence can be expected. There would be no need to dream, no strategies or gameplay to aspire for. Trading is a platform for people to become better versions of themselves. You can still be in control while not denying your fears and disappointments. You can write them down in your journal, be upset, punch a pillow, take up boxing, tell a friend you trust to just listen with no advice or I told you so. Because controlling our emotions, our disappointments would be unhealthy. It constricts our hearts. When we deny our disappointments as well, we can't alchemize the loss. Our disappointment strengthens our resolve to do better. This is our fuel to make better trades. Losses are actually gems for financial improvement. So try not to deny these or move on from these as if nothing happened. We may want to forget about losing our capital or try to be cool about it, probably because we may be afraid of adulting or growing up when we do profit. Taking our losses seriously would require us to focus, to manage our money, which would probably take away our carefreeness, may mean cutting cords with childhood status, taking off our training wheels, dealing with rules, expectations, and consequences. If this is happening to you for your mental health, what you can do is try to unravel into adulthood slowly. Adulting is truly overwhelming. So try to break it down. Think of actions like something you just have to do, a task, and not to be an adult. If you have to account for your loss, for example, just list it down. That's all. Like you have to brush your teeth or charge your phone or turn the meat because it might burn. Discipline your mind so it won't be overwhelming. So, we have talked about the victim who gets depressed after a loss or during volatility, the perpetrator who wants revenge, and the lover who wants to deny the loss and just have fun. So, the next is the perfectionist. When we trade and the price action is not going our way, we tend to want to devour so many information, consult too many analysts, use all data in turn we hesitate or we don't trade at all until the opportunity is perfect. We want to consider all the data, predictions by a handful of analysts. We consult the sun, the planets, our horoscope for the day, the palm reader. We keep trying to do it right, right timing, right price, right everything. Of course, we want to make the perfect trade. The perfect trade is the holy grail. There's always a part of us, big or small, that doesn't want to lose at all. But to want a perfect trade may be a bad call. If that's the case, we'll all be sweating all the way, overworked and over functioning. But the truth is, the markets are carefree. They don't feel obligated to reward decades of study and research and piles of charts or of the willingness to constrict our heart vessels to come up with the golden trade. It's not like that. The markets do not follow rules or order. They will if they want to, but they will rise or fall and freely defy rhyme or reason if they want to. They are extremely disloyal, like a butterfly flying from flower to flower. And so, being a genius, being so well read and well informed, does not really impress a social butterfly. In fact, it might find you boring. Therefore, to trade or invest this way won't work. The markets are designed to profit from people who overthink, overpredict, overconsider every single detail available. They are designed to bring them to their knees. Those who are trying to outsmart the market. In fact, we don't even have to have a college degree to profit from the markets. The markets can be both ruthless and generous, monstrous and feeble, exciting and boring. When we want the perfect timing, perfect everything, this normally happens because we feel that our capital is scarce and so we have to protect it. And these feelings of scarcity may be coming from our experiences of poverty, of hunger, and these want to not be denied anymore or to not be buried anymore. They want to be acknowledged, like a child tugging the parent's skirt for food. The sad truth is that our capital will always be smaller than we wish. The size of our capital will never be enough, even from by the billionaires. But what we may be overlooking is that we are our own capital. More than the right entry, right stock, our skills to take trades with low risk, the humility to admit a change of trend, our courage to jump in when where there is confluence, and hesitation when there is not. Skills to assess if the rewards are worthwhile, these matter more. If this is happening to you, try not to confuse safety by having the perfect trade or a perfect track record. No one has a perfect record. On an average, around an 80% winning rate is the most possible. Because perhaps the safety that we need is not about our capital, but our safety from our own criticism or scolding if we fail. Perhaps we can be quite brutal to ourselves when we make mistakes. So instead of focusing on your capital or on the perfect bullish opportunity, focus on your decision making, on editing your overwhelming analysis. Cut out the noise. You can be staring at an opportunity of making 30x out of your $5 capital or stop loss, and you hesitate. You chicken out because of so many indicators, voices of analysts, a cocktail of predictions. Choose to be loyal to your own simplified analysis, even if it turns out to be wrong. Being wrong is always a possibility anyway. Prioritize your decision making. You will eventually make more profitable trades than losing ones. Good decision making is the thing that will grow your account. When we want perfect trades, we want to feel safe. We don't want to feel scarce. When we want to feel when we don't want to feel unsafe, we may not lose, yes, but we might not take trades at all. We would rather not try than try and fail. We might be excusing the lack of a perfect trade for our shaking knees, for fear of making mistakes or not having a perfect track record. In trading, loss is an inevitability. Every trader always loses, even if they have been trading for decades. But they do it anyway. They just learn to minimize their losses and maximize their profits. They learn to cut their losses or dollar cost average or not chase a level that increases their risks. Chasing guarantees is like looking for a perfect person. But there is no perfect person. Sometime after we marry someone, moods, tantrums, opinions, unexpected habits come out of the woodwork. And, we begin to deal with the reality. We get upset today, happy tomorrow, angry the next, and wonder why we ever married this person in the first place the next day. We cannot prevent losses. We can only control them. What you can do, if you relate to this, is to draft a set of guidelines for trading to simplify your data. Trust the chart. Drop the news, the rumor, the astrology prediction. Just read the charts. Identify the instruments you like or believe in, like tech stocks, precious metals, crypto. Identify the time frame, the pattern or indicator, the risk to reward ratio. Keep it simple. Traders take trades that have at least 70% and up probability. This can mean being in the right trend, up or down, taking trades at signals like consolidation or bull flag, using the 4-hour chart or the daily chart for a swing or day trade. And during a hit of a trend line that passes through peaks in the past. In order to control your loss, you may want to stick to your own stop loss or estimate how much you are willing to lose. You may also want to enter as near as possible to the support or resistance levels so that the potential loss is minimized. Keep the numbers of trades as conservatively as possible. If you think you can afford 7 trades, take only 2 or 3. Take in consideration your stop losses. Try not to be greedy. In the end, it is still a risk, and there are other trades. Your discipline to your game plan is the thing that makes profits. For example, you decide to miss out on a bullish trade because it does not meet your criteria, but turns out to 10x your capital if you did. That's okay. Your consistency of discipline to control the potential loss will serve you for the whole of your life. That is better than a one time win. Choose to be faithful to your process or criteria over trades and possibilities. Build an unwavering discipline to stick to your guidelines. Your discipline will serve you for a lifetime. One thing you can do, by the way, when you are overanalyzing is to try to explain your game plan to a teenager who has no knowledge about trading. If they don't understand, you don't get the whole picture either. The solution about so many details is to edit out the noise from the bones. You may want to consult a consistently profitable mentor to clear out the noise with you. An example of a trading process or a set of guidelines shall be discussed later. So we had the victim, perpetrator, the lover, the perfectionist, and now the vendor. When we trade, we tend to become greedy. We see all the profits we could be making that when we take that trade at any level, at any risk to reward ratio. We can be afraid of missing out on an opportunity or FOMO, or we get bored, or we want some action. We just want to dive into an opportunity and just brave all the ups and downs with a wing and a prayer, and just hope that we'll survive while our lines stretch longer in our face, our children get unfair scolding, or we hold our pee to watch the charts, or our partner waits desperately for a reply or for some romance. Sometimes we think success is just around the corner. If we just hang on, we'll get a break or get lucky sometime. Or we want to diversify to all asset classes so we can ensure our financial security. Getting into trades anywhere or anytime and enduring the stress because we don't have the skills or experience, this is torture. We would rather squeeze all the juices in order to earn. Like money is our master that we have to follow around, adjust our thoughts and behavior in order to get its favor. Like making money a god or worship of money, a worship of money while we deplete our energy or decrease our sleep because we have to watch it like a hawk. We give our power away to the opportunity instead of finding the power in us. the power to refuse to be run and driven and twirled around the finger by the markets. We may be trading to gain money that brings out the best in us, but money that erodes our health, our vitality. It's money that we have to suffer for, give up so much of ourselves to gain, like our health, our self respect, our sleep, which we actually need to make good trades. Hope is not a strategy. We may win this way, yes, but lose after because we don't know what we are doing when we're just hoping. One tip I can give to you is that if you are not conditioned to think of your potential loss and you just look at the potential win, if you cannot measure your potential loss, you don't know how far you are from the support for a trade, then you might be trading to lose your capital for someone else's gain. All right? What you can do is trade only where your hands are not tied, where gaining is not a coin toss or 50-50, where your heart is not overworked with anxiety, where when your partner does not have to beg for attention or your face does not have to crave to be moisturized, or that you can sleep at night and you don't have to check if you have lost all your savings. When we become greedy, out of control, betting on anything they say is bullish, we may be working for a profit not because we would like to grow our capital, but we want to prove something else. Like we are smart or successful, worthy of attention or love or respect. We trade because we don't feel good about ourselves. We need a confirmation of our worthiness. We need a high. But we don't need to win or gain in order to be worthy. We are already worthy. Sometimes we stay so long on a trade, even if it's not going our way, because we're not ready to accept our failure. We bite our nails, pray for a miracles because we need a win. This way, we think we're being patient, but we are only actually being patient with anxiety, patient to let it corrode our body and mind because we are not ready to shatter the illusion that we are making a mistake. We'd rather deteriorate physically, compromise our capital, than lose our chance of profits, no matter how small. So, for a small profit, this costs us our health, our sleep, and maybe even our relationship. Perhaps we only settle for any instrument, any entry, any risk to reward ratio because we don't know what to look for or we don't have criteria. Like when we date just anybody we meet who can't even pay for their meal, or we stay with somebody we don't even feel excited to see because we don't want to be alone or appear at parties alone. There are opportunities that are so good and profitable and less stressful if we know what to look for. For trading techniques, what we can do is to set guidelines that we follow strictly. Having a standard for trade puts us in the driver's seats of our trades. We are the one to choose, not the one to follow the dizzying price action like a lapdog. For example, if we don't feel great, if we're tired or upset about our parent, if there's a party next door, we can choose to not trade even if it is the greatest opportunity of a lifetime. Our well-being is more valuable because this is the best ingredient for a great trade. Therefore, everything will have to wait. It's like when we feel sick or tired or busy, so we put down the phone even if our crush pops up to chat us up. We become more attractive to one who feels we have a full life and that it is a gift to spend a portion of time with us. Here is an example of a game plan. All right. So, first, choose only an instrument from your preferences, whether indices, precious metals, cryptocurrency, etc., that is at the bottom or mid bottom, like to 3,000 top to 1,000 in the weekly chart, or for shorter trades, use the daily charts. Buying at the bottom provides runway to the top, so you don't have to keep checking or losing sleep. Examples of instruments at their bottom are platinum, palladium, Alibaba in June July 2025. Choosing ones at the bottom prevents stress for days or weeks. And the rest of the time, use your time to look for other instruments at the bottom. Then, wait until they show signs of breaking out. Enter only when it is ready to explode in the daily or weekly chart with whichever you are using, like on a consolidation, a wedge, or a bull flag pattern, or a descending line. A consolidation and the rest are the fuel for it to burst forth. This builds momentum. Also, the stop loss at these points are the smallest we can set compared to entering in the middle of the bottom and peak. So watch for these. So give room and have patience. Then set your stop loss. Set in your mind how much it would take to invalidate the trend. And then choose the number of trades as conservatively as possible. If you can afford 10, take only 2 to 3 or 1 because there will be other trades. Try not to be greedy because there are still risks. If it is at the bottom, then it will grow in time by compounding. Again, beware of the possibility that it will fail and that you lose your capital. So try to be as conservative as possible. Try to enter only at consolidation and the rest, and also try to find instruments at the bottom. You can exit at the next major level on the daily or weekly chart that you are using, or you can let it run for days or weeks for daily charts and weeks to months for the weekly charts if it is in the bottom anyway. A $5 capital or stop loss allowance can grow to 300 in a week at a break point that explodes like a rocket ship in the sky. Again, there are opportunities that are so good in a way that we don't have to be afraid to be so stressed that we have to lose our sleep over or delay our bath, skip a party, or go for skip a date. Having standards, a set of rules, keeps us from taking trades just anywhere, anytime, and regretting them, but can't because maybe we're far too invested. Trading can be a nightmare. It can bring out destructive thoughts about ourselves, bring out the victim, the perpetrator, the lover who does not care how much is lost, the perfectionist, and the vendor that rides on every trend with a fervent hope of a break, bring out the greedy monster in us. In spite of it, we still try because our dreams are more vibrant than our nightmares. So we put up with nightmares. The nightmares include our powerlessness, lack of control, fear of loss, fear of missing out on opportunities. It is as if the price action can read us sometimes, knows how to make us pray to the saints, or knows when to make us drop to our knees, knows how to humble us by taking our money away, like the markets have this virtual MRI to our hearts and stethoscopes to our blood pressure. Trading is a beast indeed, but it doesn't mean we can't beat the beast, no matter how tiny we think we are. David had beaten Goliath. No matter how unfair and ruthless giants are, they didn't always win because the David in us always has an advantage, even if it seems there isn't. So when trading, what you can do is to try not to let the markets overpower you. It can do what it wishes, but try not to submit to its frivolity or stealthy ruthlessness. Have your standards or guidelines. You may just be a pebble in the ocean, but you can still choose not to be a pawn or a puppet. Give yourself the permission to choose. After all, your capital is yours. Just like in relationships, we don't have to change ourselves for approval. When we do, we don't give the people the opportunity to love us for who we are. Stick to your discipline. When you feel too bold, dial it down a notch. When you feel too fearful, even with good signals, try to just control your potential loss. When you feel too hopeful because everybody says so, give yourself a choice to trade or not to trade. If you want to take back what you lost, take a hike, ski somewhere. You don't redeem yourself by blowing your account. If you feel like you don't ever get a break, well, everybody feels that way. You are not the chosen one to steal money from. And the markets are not there to make your dreams come true. Only you can make your dreams come true, like by finding loopholes or glitches in a game that feels unfair. In a way, trading may seem to demand of us to improve ourselves, seem to demand of us to evolve, to bring out the best in us, like to cut back on restlessness, destructive rage, unprofitable indifference, ego, and to boost us from our paralyzing fear. When we start to thrive in trading, we find ourselves an improved version of ourselves, like having a superpower with all the wisdom we gain and will continue to gain. Profits come more consistently when we are balanced enough to receive. By balance, I mean we are not too bold nor too fearful, not too hopeful nor distrustful. not overthinking nor underthinking, not too angry nor too dull. We can be profitable when we are no longer overpowered by the markets, like when we have something to defend ourselves with. Until we can do that, the fears will not end, will continue to devour our accounts, or make us want to run for the hills altogether and lose possibilities of becoming a super trader.